Mortgage, and we're with you today for the Market Minutes. The Market Minutes is going to be a weekly segment where we help you, the consumer, sift through some of the confusion and misinformation that's going out about the mortgage industry. Now, if you're one of those people that have asked that $1 million question, what's my rate going to be? We're here to kind of help you out and understand what some of those factors are. So, Vince, there's a lot of factors that determine the interest rates, but what are some of the ones that we're dealing with right now for our consumers?
For sure. So we're seeing so much information in the news just kind of get thrown at us that's confusing. So we want to simplify that for you a little bit. So the most recent report that's going to be coming out is this Friday, which is the jobs report. The expectation is that available jobs are actually going to go down as more and more people are continuing to look for work. What that means is some of these companies are going to be able to pay their employees less money, which, in turn is going to mean that the cost of goods and services are going to tend to go down, which is a huge driving factor in inflation. So the inflation reporting, that information is going to be coming out over the next couple of months, and they're expecting it to trend down. They're expecting inflation to get better and better, which is a big driving factor in interest rates. So what are we forecasting here over the next couple of months with interest rates, John?
Well, so the forecast looks like right now that interest rates are going to go down. So the expectation is jobs stay kind of where they're at with, less jobs available than workers and vice versa. And inflation going down, that rates will follow suit and rates will start to go down. If you look at this chart here on the screen, you'll see this is kind of like a graphical trend of what it looks like. As this chart starts to narrow down that way, rates start to go down. As rates go up, that chart seems to do the same for you. So you want to do is you want to look at some of those things. That'll help you make a determination where rates are going to be. Now, we've actually been given some investor emails today that pricing has gotten a little bit better. Now, what does that mean long term? We don't know if rates are going to be better tomorrow, the next day, and then go up, right? If we knew that, we'd be billionaires. We wouldn't be doing this right now. But the truth of the matter is there's a lot of strong indicators that are showing us now rates are moving in the right direction.
For sure. And when you're working with a company like us, we keep you top of mind. So we're always going to keep an eye out on where rates are. So if you're in process with us, we're going to make sure that you're getting the best rate possible. If you've closed with us, we're going to take a look at your situation and see if it makes sense to refinance to save you some money, because we do expect rates to trend down over the next 12 to 18 months. If you have any questions on this at all, reach out to us at 586-371-6104 or check us out at sockmortgage.com.
And don't forget to check us out every Tuesday for the Market Minutes to help you figure out what's going on in this crazy market.